G'day everyone, welcome back to Pete's Investing. Today is April 5, 2023. This is the US crude oil price update. We have the daily, 4-hourly and hourly charts. On a daily chart, you can still we're in a downtrend with a CCI 1500, whereas on the 4-hourly and the hourly, we're in an upswing. So my approach is generally to trade with the daily direction. So only take short trades, and only when all three timelines align with the CCI 1500. You can see there on a daily it's still in a very strong downtrend, whereas on the 4-hourly and the hourly it's going against that trend. So let's see what that means and drill down to each chart. On the daily, I've drawn this key resistance area, this solid red line at 80.98, but I've also drawn this dotted line. That's a minor resistance forming. So that was where the previous resistance was, and the new resistance will be forming at the top of that wick at 81.79. So just be mindful that is our key resistance. So we need to see it break above both of those, especially that dotted line. Once that confirms in the coming days or hours, I will change that to a solid red line and delete this lower line. I've also drawn this descending diagonal trend line, and we have to respect that because if the price pulls back from that level, it may rest on that. So I'm going to leave that descending trend line there for the time being. So on the daily, predominantly short positions only. On the 4-hourly, you can see that more clearly. Again, I'll remove those. I'll replace those two red lines. I'll delete this one and I'll make that a hard red line. Now, just talk more about the hourly chart. In terms of potential reversal, like I said, if it bounces down from there, what we need to see is it break below the 61% Fibonacci retracement. So first off, let me draw a Fibonacci retracement between that low and that high. You can see there the 61% Fibonacci, if you're new to Fibonacci's, is the key area of reversal. So you can see there it bounced up around the 61%. It's stuck there for a number of hours, broke down, and then it broke up above that. So it actually broke the trend direction and it went into a more bullish momentum on the hourly chart. So looking at a smaller time frame as well, looking at this little range here, for example. Again, you can see there the price came down, bounced off the 61%, and went further upwards from there. So again, that would have been a nice little area to potentially go long, especially in this area here. Once it broke, and once it bounced off the 61%, this confirmed an uptrend. Remember, at this point here on the CCI, at that point there, that coincides with that long move there on the 4-hour. But be careful, we're still in a downtrend on the daily. So, like I said, always trade in the direction of the 4-hourly on the hourly. And if you're going to trade the hourly, make sure that the daily is in the same direction as the hourly trend. So again, going back to the hourly, that would have been a nice area to go long. That was proven by that little bounce off the 61%. Once it reached that, you can saw that turn green. And then secondly, we're looking at the potential bounce down from this area now. So more in the current state, we've got that minor resistance forming on that dotted line, and I'll confirm that in the coming hours. So the first thing we need to look at is if it bounces down from there, we need to see it break the 23%, which is 7826, the 38%, and even break below the 61% to be more bearish. And that 61% is at 7256. So if it breaks below the 61% in this area, that's our key area of support. If it comes down to there, or even any one of these points and bounces, it may be another opportunity to go along, but just be very careful. We're still in a downtrend on the daily. So again, to understand how to properly trade using the average down approach, I don't use stop losses. Reference the links in the description below. Support us on Patreon. Subscribe and like the channel, and we'll see you in a future video.